What's up, babies? We are in the week of June 15th. I hope everyone had an amazing Father's Day. Happy Father's Day to the existing fathers and to all the new fathers out there. We're going to go over the top 4 things this week that are most important. We have a short week because of the Juneteenth holiday on Thursday. So let's get to it. First and foremost, Tuesday, tomorrow, we have core retail sales coming. Core retail sales are expected to come in forecasted at 0.2%, a positive number over the 0.1% last month, month over month. Remember that retail sales are 70% of GDP. This is a big number coming in, especially with the dip that we had in March leading into the big bounce coming up into May. We want to see some strong numbers here going into the summer as we expect the remainder of the summer to be quite bullish. Depending on if we get a pullback in the next week or not. Next up on Wednesday, we have expiration, claims, and FOMC. So to dive into it first and foremost, and most importantly, expiration is one of your main events for dealer delta hedging, okay? Every single time we come to a expiration date, that is when dealer delta hedging slows down to a crawl. If the market remains bullish into those dates, especially leading into OPEX, you usually get some type of a drawback or pullback afterwards because the Van and Charm decay effect subsides. Now, with FOMC coming, and they wound up putting that on Wednesday as well, it's no coincidence that they want this market to be higher leading into Wednesday. Really quick, let's just look at the VIX chain and see what we have action-wise. So just looking at the tape, really clear, you guys can see that there is a metric ton of open interest, okay, of calls on the VIX, leading all the way from the 19 strike all the way up to 32. So they don't want any immediate pullbacks here. Just adding up these numbers quickly, it came up to 51 million in premium on average about how much dealers are going to lose if these calls fall in the money. So they don't want that. They're going to wait to have any type of pullbacks in the window of weakness, which will be after expiration, more importantly after OPEX coming at the end of this week, which is the 20th.
Also on Wednesday, we have unemployment data coming in through initial jobless claims. Analysts are anticipating a small range, somewhere between 240 to 250,000. We'll see if we continue to get that cooling labor market to keep those claims elevated. Also on Wednesday, we have FOMC coming in at 2 p.m. sharp. They're expected to continue to hold rates steady at about 4.25%, 4.5%. As usual, expect 3 waves of price action. One when the decision comes out, one when Powell talks, and another after Powell is done speaking.
Next up is the Juneteenth holiday on Thursday. The market will be closed on Thursday. But guys, always remember that anytime a holiday comes up, like the Super Bowl, the stocks that coincide with those holidays usually make big runs. So keep your eyes on UONE, CARV, AMS, and RLJ. These are all African-American owned companies. Keep your eyes on them as most of them are either running already or looking to make a run into next week.
And then on Friday, you have quarterly OPEX coming up. It seems like every quarterly OPEX we get, size just keeps increasing and increasing with each one. So quarterly and leap dates are where institutions put most of their hedges, a lot of their big positions. So we will see a lot of that rolling off into the next quarterly expiration. You could see some closing out of positions. Either way, expect a fairly muted day until you get near the end of the session.
Okay, and guys, similar to expiration, with June OPEX, you have a massive amount of open interest right now on the call side. Now, the market is continuing to run here, okay, which is keeping all of these calls in the money. All the calls that are in the money in total are over 1.5 billion on the S&P in premiums, okay? This is a huge number that dealers would take a massive hit and a loss from. So that 580 level is a level that you want to keep in mind, okay? If we are going to have any significant pullback towards that gap all the way down to 564, it needs to get to that 580 open interest level first. Fully expect 577, that is where some of your most important fibs are and volume shells are, to be hit in the coming days if we have a significant drawdown to 577 before the OPEX trades clear out. Okay, after OPEX, once you enter your next window of weakness, okay, leading into the 4th of July holiday, dealer flow and then in Charm decay starts to slow down exponentially. So if you're going to get any continuous pullback, once you get to 580 down to that gap or maybe a half gap fill, that's when they're going to have to do it, okay? Also expect the news to line up with the narrative, Israel, Iran, strikes, war, etc., okay? After we get a pullback, we're bullish all the way into July OPEX, all right? Love you guys. Appreciate it. Have a good week. Kick some ass.